Is the fourth quarter of 2024 shaping up to be very similar like the fourth quarter of 2021? Hey, I'm Dave Keller, founder of Market Misbehavior. Today we're going to talk about the market conditions here going to the end of 2024 and how remarkably similar the end of this year is to 3 years earlier. At the end of 2021, we had a pretty solid low volatility bull market phase that ended with a 2021 top that led into a very painful 2022. We'll talk about some of the market conditions we see now, how they relate to that previous year, and some of the things we'll be looking for going into year end. Before we get to those charts and some interesting comparisons, here's one more thing I wanted to tell you about. I spent many years earlier in my career working for large financial institutions, and when I left the institutional world, I remember thinking, what am I going to do to replace these big, expensive, but powerful institutional investing platforms that I've had access to this whole time? There is an option now for individual investors and financial advisors, and it's called Koifin. Koifin really combines some of those great capabilities of the big, expensive institutional platforms, along with some capabilities really optimized for financial advisors and high net worth individuals, and puts it in a very low cost, underpriced package on a web-based platform compared to the possibilities that you can achieve by using said platform. One of the features I love to use on Koifin are the ETF holdings. You can take an ETF, you can, like the QQQ, you can look at the biggest weightings, you can look at weightings by sector, you can run some basic attribution analysis. So for ETFs that you own or that you're considering owning, doing the due diligence of really understanding the exposures you're going to get is super important and super powerful for your portfolio. If you go to marketmisbehavior.com/Koifin, you can get 10% off any new membership. I hope you will check it out, and I hope you will find it as meaningful and powerful and impactful as I have found myself. Now let's get back to the charts. All right, so to begin this discussion, we're going to do kind of two things. We're going to start comparing 2024 to 2021 and just talk about why we're even making this comparison in the first place. Then we'll talk about a particular indicator called the Hindenburg Omen. Now, we have done some videos on the Hindenburg Omen earlier this year, but the kicker is it's firing again. And what happens is, with this particular indicator, it has a certain set of conditions that have to happen at least twice within 1 month. We've had a series of initial signals, but we haven't had that second confirmatory signal. We'll talk about what we're looking for between now and kind of mid-December of 2024. But first, let's make this comparison. So here's the weekly chart of the S&P 500. Now, this is what I call my market trend model. I've done another video, particularly on the market trend model. I'll make sure to put a link in the description below so you can check out that video if you like, if you want to learn more about this model and how we look at multiple time frames using exponential averages on the weekly time frame. But when we're looking at this particular weekly chart, we're doing so to compare 2024, which is the most recent year, to 2021. Now, visually, you can see immediately, I hope, how similar these two price series are, right? Look through the course of 2024 in a very similar way through the course of 2021. We have had the price above upward sloping moving averages. And the moving averages here are the 5, 13, 21, and 34-week exponential averages. Why those? Because those are the components that create my market trend model. And again, the other video will go into a little more detail about why I selected those particular weekly exponential moving averages. But all of them are sloping up pretty consistently through the course of the year. We can see a very similar pattern happened back here in 2021. And as a reminder, 2021 was kind of the initial shock of the COVID event, as it were, was in February to March of 2020. We had the COVID low there, and then through the remainder of 2020, there was still a lot of uncertainty, a lot of questions in terms of the sustainability of gains, because we're still really trying to figure out how the economy would recover and what a recovery might look like. Indeed, what being in the public might look like again, right? I mean, that's where we were at mentally as a society. 2021 was a liquidity-driven bull market. With all the stimulus related to the pandemic, things really started to accelerate, and all of that money injected into the system, also ingested, I guess, helped to boost economic growth, which was the intention, was to make sure that we were able to recover well. And arguably, the 2022 hangover was sort of the after party and waking up after all of that liquidity, and the market had to correct quite a bit. So the question is, how much does 2024 from a technical perspective compare? And just in terms of the trend in the moving averages, pretty good, right? I mean, they look very similar. Now, these are my the three time periods of my market trend model. The long-term model for me is really looking out like a year or two. It's really more trying to capture these secular trends in the market and capture some of the big picture moves. Now, you can see back in 2021, the long-term model was bullish the entire year, and just being above the zero line constitutes a bullish reading according to my methodology. And we can see that, really from end of March of 2023, the long-term model has been bullish. So in terms of the trend as defined by the long-term weekly moving averages, very similar. The medium-term model, which is the green histogram here, is looking at a shorter periodicity on the moving averages and really tells me about the next month or two, generally speaking, a couple months, I would say, on average. And so that's sort of the medium-term time frame. That's really the sweet spot to where I'm trying to trade. Those are the positions I'm generally trying to trade around. You'll be sort of in that 1 to 2 month time period. Same thing, we can see that back in 2021, the market trend model on the medium-term time period was bullish the entire time. We've had the same thing here. We've had a series of pullbacks, but it's never been enough to turn the medium-term model bearish. We can see plenty of noise in the short-term model here in 2024, and you can see the same thing in some of those actionable, kind of buyable dips in 2021, very similar to the current year. We had the short-term model dip below zero. So just using the weekly chart, just looking at the price action, general uptrend, brief minimal drawdowns. I mean, the biggest drawdown we had in 2021 was here in September. The biggest drawdown we've had so far in 2024 was in July into an August low. That was almost less than 10%, right? It was around 9+%. So very similar to 2021, low volatility, pretty consistent uptrend, moving averages sloping higher, long-term model bullish across the board, medium-term model bullish across the board, short-term model kind of identifying some of those short-term pullbacks within a clear long-term uptrend. Now look at what happened after 2021, and that's really the crux of this video, is to think about what comes next. As I've told a lot of people, as the market has kept making new all-time highs, as the S&P has pushed up to 6,000, and the question is, how much further can we go? My answer is, the market goes up until it doesn't, right? The trend is bullish until it's not. So you're looking for signs that the uptrend is over. You're looking for signs of distribution as opposed to continued signs of accumulation. So what happened after 2021? Well, starting in January, we can see the short-term model turned bearish very early on and ended up being bearish for the first 2 months solid, right? I mean, we really didn't have a buyable rally in those first 2 months. The medium-term model turned bearish the third week in January. The long-term model actually stayed bullish until about May, which for me makes sense because the short-term model is looking at quick movements. The medium-term model recognizing that a month-to-month trend is changing. The long-term model is really going to change wait for the trend to reverse quite a bit. So that is what you'd be looking for now, right? I would say now that we're getting in a very similar period, I would immediately first look for the short-term model to turn negative. And when it does, because it will at some point, the question is it enough of a pullback to make the medium-term model turn negative? That's what differentiated all these brief pullbacks in 2021 from a significant impulse move to the downside, a big thrust lower, which caused the medium-term model to finally give a sell signal for the first time in about over 18 months there. So that's kind of what I would be looking for here in 2024 going into 2025. Now, what gives me even a little bit of confidence that we may be looking for a similar kind of pattern? Enter the Hindenburg Omen. And as a reminder, I have done some earlier videos this year talking about this model in a little more detail. But just to summarize it, this is a classic kind of market topping model. Certain indicators are kind of binary, right? They are appropriate at tops and bottoms, and they're kind of just the signals are inverse to one another. Like MACD or PPO comes to mind as an example of that, right? It gives a buy signal, it gives a sell signal, it kind of goes back and forth, and that's sort of how the indicator works. It just continues to give a series of buy and sell signals going back and forth. Something like the Hindenburg Omen has nothing to do with market bottoms. So at market bottoms, you don't even look at it. You just look for it at major tops or at when we're in an uptrend and you think we might be getting near a major top. This was created by a market strategist decades ago named Jim Mieka, and what Jim did supposedly was he reviewed a bunch of market tops going back in history, and he looked to find some consistent patterns. Right? What are the things that tend to happen when the market has made a major top and looking at the conditions just before that top occurs so that we can try to have a forward-looking mechanism and try to anticipate the next Hindenburg, right? The next crash before it begins to accelerate. He basically found 3 things need to be checked off of a list to confirm a likely major market top, and really fourth in terms of confirmation. So number 1, we need the market in a confirmed uptrend. And to do that, we look at the 50-day rate of change on the NYSE Composite Index. We just want to make sure that that's above 0. And that's that first panel below the price. The gray line is the raw data on the New York Stock Exchange Composite Index, which on stock charts is $NYA. And then the black line, which is the line we're looking at, is a 50-day rate of change. So we just want to make sure that the NYSE Composite Index is higher than it was 50 days ago. And if so, that's check number 1. Check number 2, you need at least 2.5% of the NYSE listings making a new 52-week high and at least 2.5% making a new 52-week low on the same day. The reason why that was important, this is a bit of counterintuitive, was, he saw that there was often indecision. And while you'd think that the signal would be a lot of things going down, there's an indicator called the Titanic syndrome, which actually looks for that. The Hindenburg Omen actually looks for disagreement and actually looks for a bifurcation where there's things that are really working and things that are really not working. And if at least 2.5% of the NYSE listings do that on the same day, that's check number 2. Check number 3, breadth has to turn negative. And what he used for that was the McClellan oscillator, which is a short-term breadth indicator derived from the advanced decline reading every day. And basically that indicator has to push below 0. That would be the 3rd box check. Now, one final requirement, maybe the 4th item on the list, is you need to have that combination of 3 signals at least 2 separate times within 1 month. So you can look for about 30 calendar days, about 20 trading days. You need to have an initial signal, then you wait for another signal within the next 4 weeks. And you have to make sure that it has multiple signals within a 1-month period. Now, we can see why this indicator is so valuable just looking at the last 5 years, because it's signaled twice in the last 5 years. The most recent time it did it was this comparison we are currently making, which is one of the reasons why I wanted to do this video. The last time this happened was in December of 2021. So in November and December, we had multiple indications within 1 month of each other, all firing that same combination of criteria, fired independently twice within 1 month. And by the way, this bottom indicator is an indicator that Stock Charts calculates every day, which basically just counts how many of those 3 conditions are being satisfied. And if the indicator is at +3, that means all 3 of them are firing on the same day. And that's why it's just a helpful indicator to look for. The previous time before December of 2021 when it happened was in February of 2020, back here just before the COVID crash. Now, did it predict the COVID pandemic? Absolutely not. Did it predict the end of the COVID rally? Kind of. I mean, again, this is not meant to predict the reasons why the market rotates lower, whether it's a lack of liquidity, whether it's some geopolitical event, has nothing to do with that. It just, again, the strategist that created this found similar conditions at major tops. So it's just looking to see if we have another similar kind of pattern, with the assumption that if it fires before pretty successfully at a lot of major tops, I just want to know when that happens again. So the reason why I wanted to do this video today, we had an initial signal this week, and it's the first time we've had this in a couple months. In early September, on that pullback kind of here, we had an initial reading and actually remained triggered for about 3 days in a row before alleviating the conditions, but we never had that second confirmation. It fired again in July, right about here, as we were nearing that July peak. But again, we didn't get that second confirmation within a month. It happened in May, late May, just before that May pullback into a low into early June. But again, never got the confirmation. And then we had it in early February. Never got the second confirmation. So again, the idea of this indicator is not just that these conditions occur, but that they happen multiple times. Because what he found was there would be tops are not a moment. Tops are usually a process. And by looking for that confirmation, I think he was able to identify that at major tops, at short-term tops, you'll get kind of a sudden reversal and it'll kind of digest it and new buyers come in and things are just fine again. But at major tops, you have indecision that is not just on one moment, but it's over a period of weeks, if not maybe a month or so. And so that's why this indicator is so vital. So as of right now, as we saw from the market trend model, the overall trends are very similar. 2024 has been very similar to 2021 in terms of the overall trajectory of the market, in terms of the frequency and the depth of the pullbacks, the drawdowns, in terms of the volatility, which have been relatively low in both years, in terms of the market trend model, which sort of relates all of those long-term, medium-term, short-term trend phases. They've been very, very similar. 2021 ended with a confirmed Hindenburg Omen signal that was a fantastic early warning that 2022 was going to be a painful year. We may be setting up for another one here in 2024. So between now and really, late December around Christmas, we're looking to see if we have that second confirmation signal. We've had a couple initial signals in 2024. Do we get the confirmation by year end 2024? All right, what do you think about the Hindenburg Omen flashing an initial sell signal once again here as we get toward the end of the November 2024 time period? Do you find yourself optimistic about the S&P and the NASDAQ going into year end, or do you think there are more signs for concern that investors are pricing into the market? Make sure you drop a comment below and let me know. For Market Misbehavior, I'm Dave Keller. Oh yeah, one other thing. If you like this sort of thinking about market history, historical comparisons, thinking about investor psychology, market sentiment, breadth indicators, and making better decisions by having a disciplined approach using technical analysis, I bet our Market Misbehavior Premium memberships may be a really good idea for you. You can find out more information at marketmisbehavior.com/premium, or just scan the QR code that you see on your screen. Make sure when you're so impressed with all the benefits of the premium membership and you go to sign up, make sure you use the code YouTube when you check out for 20% off your first 12 months on any plan. For Market Misbehavior, I'm Dave Keller. Have a great one, and remember, it's always a good time to own good charts.